Next guest is also bullish on Taiwan, expecting capital links to form between the two countries of Taiwan and China. Simon Powell joins me now from our Taipei studios, where he is the Taiwan country head at CLSA. Welcome back to the program, Simon. So let's talk about,
to be here, Susan.
Taiwan. Nice to see you as well. How compelling are Taiwan stocks right now? We saw the TAIEX running up over 40% so far in the year. Is there still more room to gain? You heard how BNP being very bullish.
Yeah, look, if you take a top-down view here, Susan, there's a lot more room for this market to move. Remember, this is being moved on two key things. Local liquidity. We're seeing capital inflows into the market continue. We expect the numbers out today to show further capital inflows in the second quarter. And obviously the positive news flow of links with China. Now, on a bottom-up basis, these stocks start to look expensive on a PE basis. Our view is that the earnings from links with China will take a reasonable amount of time to show up, so investors are going to have to live through a period of high PEs, but on a price-to-book basis, we think there's upside for many equities here.
What about that prediction from BNP, 43% gains over the next 12 months? Is that a little excessive in your view?
Look, I think, picking targets for indexes is probably one of the most painful and least rewarding things that an analyst can do. Especially in the light of the liquidity that we're seeing. We have no doubt that over the next 3-year period, a number of things are going to happen here in Taiwan. One, the economy can't get any worse and is only going to get better. And I think you'll see that in the second quarter GDP numbers, and we believe that things will improve through third and fourth quarter and into 2010. Two, links with China. The positive news flow around that is going to continue right the way through until the next elections here in 2012. And then I think three, you're going to see further M&A deals between Chinese companies and Taiwanese companies that will excite the market. So definitely the index goes higher from here. In the short term, however, I think some of the political issues that President Ma is facing right now might make some local investors cautious, so we may see some money being taken off the table. Our view is that this is a buying opportunity for those that can stomach these high PE ratios that we're seeing here in Taiwan.
Well, I guess in talks recently, President Ma says that he can't fully open links with China, considering there are still missiles pointed at the island from the mainland. Is there a possibility, considering there's all this hope, all this hype of these growing ties between Taiwan and the mainland, that things could turn horribly wrong?
No, I don't think that there's much of a risk of things going, as you say, horribly wrong. Our view is that the capital links discussions, the discussions around further economic ties with China will continue. There'll be bumps in the road where there are some things that Taiwan and China can't agree on, and some of that might be over issues of missiles or military or even no-fly zones, etc. But that over the long term, we think it's inevitable that there'll be greater economic ties between China and Taiwan. And the key thing here is, once this economic cooperation framework agreement gets signed, and many of us are saying sort of first half 2010, it opens the door to Taiwan entering into free trade agreements with the rest of the ASEAN region. Remember, in some respects they've been precluded because of issues with China. Once things improve with China, it opens up trade for the rest of Taiwan. So this is not just a Taiwan-China thing. It's actually a Taiwan and the rest of Asia and rest of the world thing that gets better in 2010.
Okay, Simon, you mentioned that stocks in Taiwan may be looking a bit expensive if you look at it from, I guess, a bottom-up perspective, and PE is trading at multiples higher than, I guess, other markets around the region. So how do you pick stocks in Taiwan then? How do you know what's a good buy?
Well, I think the way we're really looking at this is on a long-term ROE basis. So if you take a look at this market, it's now trading towards the bottom end of its long-term return on equity range at sort of 10%. On an average basis over a 10-year period, this is a market that's returned sort of 16% on a return on equity basis. And if you kind of assume that the economy here doesn't get any worse, it's been badly hollowed out in the last 5 to 10 years and really can only get better from here. If you assume that earnings get better from here, then you assume that ROEs get better. And so what we're looking at here in this market is a lot more focus on price to book as opposed to price to earnings on a relative basis. We're also looking for stories that tie in directly into the capital links theme in terms of stuff around transport, domestic asset reflation story. I think it's important investors understand this is about the reflation of the Taiwan economy.
Okay, Simon, we got to stop you there. We're heading to commercial break, but we'll talk and delve more into your stock picks after this break. Also, let's get back to our discussion on Taiwan stocks, and we're talking to Simon Powell, who is the country head at CLSA. And before we left off our commercial break, as promised, Simon, let's talk about some of your stock picks. And one of the bullish picks among the ones you suggested is Asia Cement. This is Taiwan's largest cement producer in terms of exposure to China. And you think it's a pretty good proxy story for Taiwan because any little movement in cement prices, you say, really reflects it on the bottom line.
That's exactly right. This is a very operationally leveraged company to a Taiwan construction boom. The way it plays out is we see commercial property prices rising here. We see the demand for commercial property increasing. We see Chinese companies wanting to come and set up headquarters here. It's very hard for investors to get access to that commercial property boom in terms of a direct play. We prefer some of the second derivative plays of the cement companies. Asia Cement, well leveraged to just a slight increase in demand for cement or price for cement in Taiwan. Remember, this was an industry that was quite heavily consolidated through the difficult years here in Taiwan. So slight increase shows up on the bottom line. We think that's the way investors should play the construction property boom that's going to take place here in Taiwan.
Yeah, Simon, CLSA's target price for this stock is about 52.60 Taiwan dollars. It's actually the highest among consensus and assumes a potential gain of 47% from its current levels. But again, looking at, price to book and earnings multiple for next year versus the peers, it's looking a bit expensive. What catalyst do you think that, we'll see maybe to boost stock prices?
Well, I think that the way that people have to look at this relative to some of the peers like Taiwan Cement is we tend to think about this company in terms of its exposure in China is in locations where it can get better pricing power as opposed to Taiwan Cement closer to the coast. So I think first thing is it's going to have a better result in terms of its China operation. Second, our sensitivity analysis suggests that it's worth this kind of premium in terms of the operational leverage that I talked about. So slight increase in demand and pricing for cement. This is the company that's most leveraged to that. So it's worth the premium in our view. And over the longer term, if this is a 3 to 5 year commercial property construction lift, then ROEs return to longer-term averages, and it justifies the price to book. But as I said, a lot of what we find looking at Taiwanese equities is bottom-up. They all kind of look expensive on fundamentals. The issue in this market is we're talking about a more thematic 3-year program here of rebuilding of Taiwan.
Okay, well, Simon, let's just pick up on that point. If you think Taiwan equities are looking a bit rich from a bottom-up perspective, then where and when are we going to see the best entry point into Taiwan stocks? Is it now?
Well, that's a question I get asked every day by international investors who want into this market on the longer-term theme. People are looking for entry points. It's really difficult to say. We have seen a reasonable drift lower on lower volumes. We could see the market drift lower on the short-term political overhang of what's happening here with reference to the typhoon and the political instability that that's bringing. So I think that there are opportunities here for people to get back into Taiwan with the index lower than it's been for some weeks. So yes, the simple answer is yes. People who are taking a longer-term view need to potentially be entering here.
Okay. Well,
go ahead.
Yeah, let's get into another one of your stock picks then. What about Cathay Financial? Should investors be looking to buy into this bank? It is the biggest financial group in Taiwan, though it did get hit a bit by the typhoon as it has to pay out some insurance claims.
Well, there's a few things here. I think a lot of analysts, ourselves included, have been expecting non-performing loans to be worse in 2010 than they're probably going to be. So things are looking a little bit better for Taiwanese banks in our view. We might start to see also an increase in mortgage lending. Ties in with what we think is going to happen on the residential property market here. We've seen prices jump. We think that transactions will start to jump, and certainly indications are that consumer borrowing will start to increase. So that's all positive. On the China links story, there's a few things to like about this. One, if this MOU is signed between China and Taiwan on financial services, then we may be able to see Taiwanese banks enter the mainland, open branches, and start to drain some of the excess liquidity that they've got in the system. And I think the final thing here is that there's interest in the market around, will there be an M&A deal similar to the China Mobile Far East Tone deal that we saw, and we think they will. There'll be some kind of strategic stake between a Chinese bank and a Taiwanese bank.
Okay, well, let me ask you this, Simon. Again, for Cathay Financial, CLSA, pretty bullish, above consensus with your target price. In this case, as in Asia Cement, is it worth the premium?
Yeah, we think it is. I mean, my sense here is, look, Taiwan's an overbanked market. There are probably too many banks here. There isn't a huge list of quality bank assets that investors can buy. This represents one of the few in terms of quality of management, quality of balance sheet, and exposure to China. And so, it goes back again to it's worth the premium, scarcity value in terms of a quality company, quality equity.
Okay, Simon, great talking to you today. Thank you for that. Simon Powell, CLSA's Taiwan head. Now, before we go, let's take a quick check on the market in Taiwan. It's Asia's biggest laggard so far this morning. Checking in on the TAIEX, down over 1% so far in trade. Now, coming up.